Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. Over 500 subscribers. We are on our way to 1,000. So if you have not joined the Vested Interest community, go ahead and hit that subscribe button down below, and don't forget that notification bell so you are notified whenever we drop any new content. On this channel, we cover dividend growth investing. It's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow to cover the dividends. I utilize both a dollar cost average approach, consistently investing into the stock portfolio every week. That's what this video here is about. This is the portfolio update. I put these out every Sunday. I also do a stock pick of the day video series where I look at a stock that may have pulled back on the day or I think I might see value in and share that with you. It is a real high overview of the stock. And if you are interested in that type of content, again, hit that subscribe button down below. Everything is out in the open here, nothing to pay for, no Discord chat or paid paywall to get through or anything like that. And let's jump in. So as we said, this is a portfolio update, and we did add $1,654 in new capital to the portfolio. So if you've been tuning in lately, I have added options to the portfolio. So HPQ, I did a put option this week. It closes on the 28th at $30. It's currently just under $30, and I received $14.45 in premium. So sold the open, put option, $14.45 in cash goes back into the portfolio. That's part of the funds that I invested this week, actually. Now, unfortunately, this is one of those weeks where I do not get any dividends, so zero to report on that front. No dividends this week. Boo! I don't like weeks whenever I don't get dividends, but there are weeks throughout the year that happens, so it is just part of investing. And then we get to the first activity, April 18th. We did a big tranche of buys here, $1,551.74. The majority of the funds I invested this week were on the 18th. And with those funds, we bought 2 shares of Verizon Communications, ticker VZ, out of the communications sector at $39.09. I like Verizon, anything under 40. We bought 18 more shares of Medical Properties Trust, ticker MPW, at $8.34. And this is a REIT, right, out of the real estate sector. And I like them really under 10 or even $11 per share. My cost basis is in the 10s. I'm trying to get it down into the 9s. A lot of people talking about a potential dividend cut here, but they have a massive dividend yield currently at 15%. So very nice dividend yield. Even if they were to cut that down in half, 7 to 8%, I would be fine holding this under, let's say, $11 per share. We added 6 more shares to Omega Healthcare Investors, ticker OHI, another REIT out of the real estate sector at $27.01. And these are very similar companies here, Omega Healthcare Investors and Medical Properties Trust. We added 4 more shares to our Bank of America position, ticker BAC. I like Bank of America right around the 30 or lower mark. This is bringing my cost basis down here. This is out of financial sector. We added 2 more shares to Leggett & Platt, ticker LEG, out of the consumer discretionary sector at $31.93. We added 11 more shares of Sibanye-Stillwater, ticker SBSW. This is out of the materials sector, a mining company here, African mining company. And it is starting to come back. I was actually hoping that it would stay down in the 8 range so I could really build this position out. Realty Income has come down under $62, almost under 60. I would love to get it back in the high 50s. Hopefully it is heading there, but I felt comfortable here. This is under my cost basis. So we added 9 more shares to Realty Income. This is another REIT here. So big on the REITs this week. A lot of pullbacks in that particular sector right now. It seems like high interest rates are probably starting to impact them. At $61.01, we picked up those 9 shares. And we added 2 shares, big drop on the day. This is part of the reason that I jumped in and bought on the day. J&J was down $161.16, and they actually released pretty good earnings, so I was surprised to see them down. So we added 2 more shares. This is out of the healthcare sector. All total, these new positions, new shares here added $90.60 in passive income. So very nice to see. I think my income is averaging about $60. Passive income increase is about $60 per week right now. Sometimes we get a nice big one. A lot of these companies were, around the 5% yield or higher, except for Bank of America. But a lot of these realty, Verizon is over 6. Like I said, Medical Properties is around 15. This one's over 4. Leggett and Platt's over 4, Sabini Stillwater's in the 4, Realty Income's over 4. Johnson & Johnson is the lower one around the mid 2s, but still. So high yielders this week added a very nice chunk of passive income on the 18th. Well, we weren't done. Ally Financial, the banks continue to be a mess. So I am taking advantage whenever it is under my cost basis, and it was just barely under my cost basis by a couple of pennies here. So we did add another $102.68 on April 21st. 4 more shares of Ally Financial out of the financial sector, ticker ALLY. Excuse me. And these 4 shares added to the portfolio added another $4.80. We did add all total $1,654.42 in new capital, and total passive income added with Ally and the other purchases we saw on the previous slide, $95.40, almost $100 in yearly annual passive income. That is what the portfolio is all about. Next up, we will run through the sector weights real quick. Communications is making up 9.05% of the portfolio currently. Consumer discretionary is at 9.98% of the portfolio. Consumer staples sitting at 6.16. I would like to add to this, but Procter & Gamble has really run up. So has Kraft Heinz. So I'm looking for some pullbacks there to be able to add to this sector. I was actually looking at Tyson Foods potentially adding, but they do not have very high dividend growth. That was one of the reasons I kind of held off there. But looking at least or hoping for some pullbacks here over the next 6 to 9 months here so I can add to this sector. Energy sector is making up 8.11% of the portfolio. 11.39 is financials. Healthcare is sitting at 9.27% of the portfolio. Industrials has crept up to 10.75. Looking for another pullback on Union Pacific there when it drops back under 200. I'd like to add some more to that one, or actually under 198. I think my cost base is around 194, so I don't mind it under or right around 200 or under. Technology is sitting at 8.81%. Materials sitting at 12.25%. No utilities, still waiting on a big pullback there. REITs and real estate is sitting at 14.23%. Currently makes up the biggest chunk of the pie. And with the purchases this week, it kind of kicked it up a little bit. I don't like any one position to be more than 15, 16% of the portfolio, so I probably will hold back a little bit here and try to fill out some of these other positions whenever I see the pullbacks. But it's hard not to throw money in whenever you see stocks that you have in your portfolio, or at least for me, in the red. Now on the right here, you can see the same thing, the weights here, but also what the dollar value for each sector is. So you can look at that at your own leisure. And what it's all about, the overall portfolio. I share this every week, whether I'm up, whether I'm down, whether I'm in the red or in the green, or it's just flat. All the positions that I own, how many shares of each, the current price as of the close of business on Friday, the current market value, average share price, my average purchase price, whether I'm up or down, how much I'm up or down, right? You can see the ones in the red, that means I'm down. The ones in the black, I'm up on. Percent return, right? You can see some red and green in the portfolio. Overall, down 2.51%. What sector the stocks fall in, and whether they're a quarterly payer, monthly payer, semi-annual, their current dividend yield, my yield on cost. So we saw on the previous slide, we saw the sector weightings. This is by position. So Ally, for example, is 3.38% of my portfolio. Bank of America is sitting at 8%, right? So you can go through those. Estimated annual income. Sorry that my face covers up some of these, but this is the month that they pay out and how fast current dividend growth is. Johnson & Johnson actually just recently raised their dividend, so this one was up this week as well. And here is what it is. So here, let me go through this real quick. So market value currently of the portfolio, $130,587.64. I have $133,950.93 into it. I am down $3,363.28. That's in the negative, in the red, 2.51%. Current dividend yield of the overall portfolio, 5.128%. Yield on cost sitting at 4.99, almost over 5%. And this is really what it's all about. The passive income provided by the portfolio, the dividends paid out, annual dividend income here sitting at $6,696.19. And this continues to go up, whether the market's up, whether the market's down, whether the market is floating sideways. So long as this dividend income continues to go up, and that is why I don't mind the red, right? If I can buy these positions cheaper, that will only increase the yield and increase my dividend income faster. Right, that is the idea. If there's a sale in the market, don't run the other way. That's whenever you want to put your capital in, right? All right, well, that is it. Another portfolio update, another week in the books. Let me know how your portfolio did. What did you add to your portfolio this week? As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, hit that subscribe button. Join me on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know again what was going on in your portfolio. What did you buy? Did you have any sales? I am considering a sale here on AT&T. Boy, it was a bad week for them. I did a video on that the other day, so if you're interested in that, go ahead and check out the channel and go. And I do personally read and respond to the comments on the day I drop a video. So go ahead and drop your comments down below, and I'll get back to you. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you in the next one, and thanks for stopping by. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.